Your customer sends a contract clause that says you need $5 million of commercial general liability insurance per occurrence and $5 million aggregate. Does that mean the insurer will pay $5 million for anything that goes wrong? No. A policy limit is important, but it is not a coverage guarantee. Goal: understand what a $1 million, $2 million, or $5 million limit generally means, what per occurrence and aggregate can mean, and why limits do not broaden coverage. A policy limit is usually the maximum amount available under certain conditions. It is not a promise that every loss will be paid. The claim still has to fall within the policy wording, conditions, endorsements, and exclusions. Per occurrence often points to the maximum available for one covered occurrence or claim situation, depending on the policy. If one covered accident causes injury or property damage, the per occurrence limit is the number people usually look at first. Aggregate often means the total available for certain claims during the policy period. If multiple covered claims use up the aggregate, there may be less available later. The details depend on the type of coverage and wording. A higher limit does not usually make coverage broader. It may increase the maximum amount available for covered claims, but it does not remove exclusions, add missing coverage, or change what the policy is meant to ensure. Certificates often show limits such as each occurrence, general aggregate, and products completed operations aggregate. But a certificate is evidence or summary information. The policy wording still controls. Limits also interact with deductibles and retentions. A limit may describe the maximum available under the policy, while a deductible or self-insured retention may describe an amount the business is responsible for first. Customers may ask for higher limits because of project size, contract risk, internal procurement rules, lender requirements, or risk transfer practices. That does not automatically mean the requested limit fits your business, or that your policy can satisfy the wording exactly. When a customer asks for a limit, send your broker the full requirement, not just the dollar amount. Include the coverage type, per occurrence, and aggregate wording, additional insured or waiver requests, project details, deadline, and certificate instructions. A better broker request says, "Our customer requires $5 million per occurrence and $5 million aggregate CGL, plus additional insured wording. Attached is the full clause. Can you confirm what our current policy shows and what options we have?" Short recap. A policy limit is usually a maximum available, not a guaranteed payout. Per occurrence often points to one covered event. Aggregate often points to a total for the policy period. A higher limit can change how much is available, but not what is covered.